There's no question that we're in unprecedented times. The black swan of coronavirus, COVID-19, has changed everything about everything. Whatever strategic plans we had in place, whatever growth strategies, wherever we thought we were going to be on March 30th, 2020, we are not there. And that's because this black swan. Black swans are events. A black swan event is one where it can't be predicted or forecasted. It has a profound and lasting effect on society and humans. And in retrospect, maybe we should have seen it coming. 9/11 was probably the most recent example of something that was sudden and extreme, had a profound and lasting effect, and maybe we should have seen it coming. Well, COVID-19, the coronavirus, falls in the category of a black swan event. And as a black swan event, no one could be prepared or anticipate what the implications would be. Fortunately, we're seeing our country, our government, many of our experts rally behind this as we begin to sort out these challenges. And that's why we're so fortunate today to have two of the amazing experts that exist inside the Vistage community, Elijah Gray and Mark Emmer, to share their thoughts specifically on the recent government programs regarding the Small Business Administration and the COVID-19 programs that put in place. Let me first introduce Mark Emmer. Many of you know Mark. He's one of our most popular and well-read authors and contributors to our website. He was one of the first people to start writing about COVID-19 back in February. Mark's an author, a speaker, consultant, an expert in strategy and strategic planning. He's helped over 140 companies craft their business strategies. Mark's delivered over 300 talks for Vistage, a frequent contributor to the Research Center, Inc. and Forbes. Mark, thank you for making yourself available and sharing your expertise. Also joining us, and we'll turn this over to her real quickly to get us started, is Elijah Gray. Elijah Gray is a partner with B2B CFO in the New York City area. She's a seasoned financial professional with over 20 years experience specializing in helping small to mid-sized businesses achieve success. After 15 years in the C-suite at a variety of companies, Elijah went on to found a bank focused on serving businesses and nonprofit organizations and specializing in SBA, Small Business Administration lending. Her experience in building startups paired with her experience serving as CFO and COO brings a unique perspective to what clearly are challenging times. So Elijah, with that, let me turn it over to you and ask you, can you walk us through some of the fundamentals of this myriad and the blizzard of all the different programs that are going on and help our members make sense about it? And then we can peel apart and ask some questions. Then we'll bring Mark back to get his expert perspective in. So Elijah, please enlighten us on how this all makes sense.
Thank you, Joe. So there are 3 programs right now that we'll go into and we'll talk a little bit about, but we're going to concentrate on the Paycheck Protection Program, which I like to call the PPP, makes it easier. But there are 3 programs: the Paycheck Protection, the Economic Disaster Loan, the EIDL, and then there's the normal, which we'll talk about also, Small Business 7A program. So the Paycheck Protection Program can be used for, and that was this was passed by the president on Friday. That's the program as part of the CARES Act. It can be used for payroll and group health benefits, your mortgage interest, rent and utilities, and interest incurred on other debt. The way they calculate the loan amounts for this program is 2.5 times your average monthly payroll, up to a maximum of 10 million. And we will go into what that included in that payroll cost. The terms on this debt is 10 years is the term on the debt, and there are no payments for the first 6, and you can extend it to 12 months. The rate on this program is fixed at 4%. And like I said, there is a forgiveness program that has up to 100% of the loan being forgiven with certain standards, which we'll talk a little bit about as well. And banks will be lending this money. At this point in time, it is banks that currently are part of the SBA and can lend SBA money. And that is all, at this point, that is all who can lend this money. That could change, but right now that's where we are. Then there is the Economic Disaster Loan, EIDL. This can be used for payroll, fixed debts, accounts payable, and other expenses that can't be paid because of this disaster. For example, your insurance premiums. If you don't have sales, you can't pay for your insurance premiums, things like that. This loan can be up to $2 million. It is a 30-year term with payments deferred for 1 year, and the rates are 3.75% for a corporation or a business. It's lower, slightly lower if you're a nonprofit. There's no forgiveness program on this debt, and the government actually lends this money. There's pros and cons for that. The program, you can get $10,000 upfront within 3 days of applying on the government's website. However, the rest of the money that you apply for might take longer. My experience when Hurricane Katrina hit, Hurricane Sandy hit, is it took businesses 4 to 5 months to get these funds in that program back then. Not sure what will happen now, but I am telling people to prepare and understand that when you're dealing with the government, there's a bit of a different timeline. And then there's the normal small business 7A program, which people might already have loans in, or might be in the middle of asking for loans for the 7A program. And this program's always out there. It's always part of the government programs. What makes it interesting is part of the CARES Act included the fact that if you currently have an SBA loan, a 7A SBA loan, the government is going to pay 6 months of your payments for the next 6 months from April 1st on. And if you are in the middle of applying for one of these loans and you get the loan and it's funded before 9/27, you will also receive 6 months of your payments paid for. So that's a good thing to keep in mind throughout all of this as you go about your normal business. And banks give these loans as well.
Hey, Elijah, when you say banks, is this any bank can do this or just SBA certified banks?
This is going to be the same, only SBA certified banks.
And how would I find out if my bank is certified or not?
Yeah, so number one, I suggest always dealing with your own bank and calling them and asking them if they do SBA loans. That's the first thing you can do. Another thing you could do is go onto the SBA's website, and there's a lender match website, or like on their website, there's a lender match, so you can find out who in your area or all across the country is an SBA bank.
Yeah, I found most of your big banks are part of this program.
Correct.
It seems like they would be much more able to pivot quickly and execute on this than what the Small Business Administration on its own can do with the economic disaster loan. Is that correct?
That is correct. The banks that are currently in the program, Paycheck Protection Program, once the SBA releases their rules, and they have not done that yet, per the act, they can take up to 30 days to release their rules for banks. Hopefully that'll go quicker. I know the Treasury Secretary is saying it's happening today. I'm not sure that will, but as soon as they release them, then banks will be able to lend. So I've been telling people, please, think about in the next 30 to 60 days, you'll get that money, just to be realistic in the scheme of things, where if you're going for that EIDL loan, you're going to get 10,000 possibly within 3 days, but the rest of it most likely will take 4 to 5 months. So it'll be a little of a slower program, I think. We're waiting to see, but that is typically how the government has worked.
So the relief is out there. It's going to take time for it to get to us. Consequently, we got to make sure we've got our cash flow in line, and we're lined up with our local creditor, lender, and banker as well.
Correct. And the other programs that you can also look into, and every state is different. But I'm telling people, please check with your state, because the state also has a lot of funding for this and has some grants going on. I know, just for example, in the state of New Jersey, there's some $5,000 and $10,000 grants businesses can take advantage of. So that's another route. I say explore all the routes. Line yourself up for this money. I'm recommending you apply for the EIDL loan, but you also apply for the Paycheck Protection Program, because it doesn't hurt to have both options available to you. You can use both options. The one thing the SBA does say in the act is that you cannot use your EIDL funds for the same purpose as the Paycheck Protection Program. So you can't use it for payroll, let's just say, but you can use it for accounts payable or insurance, things like that, that are not part of the Paycheck Protection Program.
Good.
And let's talk a little bit about how they calculate the loan amount for the Paycheck Protection Program, because this is definitely an area that's been confusing. And now that we have the act, we know what the calculation is. They are taking your average monthly payroll expenses on a trailing 12-month basis. And they're saying that 12 months ends the month before you get the loan. So let's just assume you get the loan in April. That ends from April 1st of 19 to March 31st of 2020 would be your trailing months. And they're going to take your average payroll times 2.5. So basically, you're going to get 2.5 months of payroll paid for through this program. And they just define payroll as salary, wages, commissions. So anything that is on your employee's W-4s or in box 1. Payment of cash tips if you're a restaurant, this could be important. Payment of vacations, payment of group health care benefits. So you're going to want to know what you spend a month on group health care. payment of any retirement benefits that you pay your employee, you pay retired people, any payment of state or local tax that the corporation pays on the compensation of employees. I'm going to skip the next one for a second, and payments of income to independent contractors. So any of your 1099 people, you do get to take credit for that. So you're going to want to make sure you know what you pay your independent contractors over that trailing 12 months. And then there is also a provision in this act that these loans can be made to sole props. So that's going to be another way you can apply for these funds. The only thing so I listed all the things that it has. What it does not include is any portion of salaries over 100,000. So you can include up to 100,000. So if you make 150,000 as the owner, you can include the first 100,000. You cannot include after that when you're calculating this average monthly payroll expense. And that's owners, any employees, anybody. It also does not include salaries of people that live outside the United States. So if you have any employees that live overseas, you cannot include that in this calculation.
Hey, Elijah, what if they're an expat working for your company but sitting in Germany, for example?
Yeah, it'll be something I think the SBA needs to clarify a little more. But right now, the act says if they live outside the United States, even if they work for your company, it's not included.
Too bad for you.
Yeah, exactly. One of the things that the act lays out a lot of stuff, but the SBA definitely needs to clarify a lot of things to banks as well, because there is a lot of things that are kind of left either unsaid or maybe, in true government form that doesn't always make sense compared to what actually happens. So the SBA will be doing a lot of answering questions for banks about some of these issues as well. And as I said earlier, these loans are 10-year loans with a 4% fixed interest rate, and payments are deferred for the first 6 months. So if you get this loan, you don't have to make any payments on it for 6 months. That's automatic. And there is the possibility to get it extended to a year once the time comes. A lot of people are talking about the forgiveness portion of this act. So there is, for the Paycheck Protection Program only, there's a forgiveness program. And there's a lot of confusion on this, I will tell you, and there's a lot of answers that still need to be answered by the SBA as well in this whole portion. And I try to recommend to clients that don't worry so much about the forgiveness. In my eyes, when you get this Paycheck Protection Program, you need to run your business, do it smartly. And if that means you can bring back employees because you have work for them and you can make revenue, do it. But if, God forbid, you can't, that's not something that works for you, for your business, don't worry about the forgiveness. This is very cheap, 10-year money, and there's no collateral and there are no personal guarantees on this money. This probably will never happen in your lifetime again, that you will be able to get this money with those kind of terms from the government.
Elijah, why wouldn't someone go for this program?
I really don't have a reason. I have told everybody I know that they should go for this program. Now, the only thing, maybe if you're in an industry, and there are a few of them, where you're not being affected, where actually you have more business than you need, or that you had before the COVID-19, then you might not qualify, because it does specifically say you need to be affected by COVID-19. Now, the government is assuming pretty much 95% of businesses are affected, but we do know there's probably some businesses, maybe in trucking, that are not affected by this. That would be maybe the only reason if you didn't have an effect from COVID-19. But other than that, I think it's smart for everybody to go for it. It's cheap, 10-year money at the end of the day. And you have the ability to have a forgiveness part of that. And the way they calculate the forgiveness is they are using 8 weeks from when you received the loan to look at what you spent. And the reason they're doing this is they do want to incent employers. If you laid employees off 2 weeks ago because you didn't know about this program, and you do end up bringing them back when you get this loan, they don't want to penalize you. So that's why they're going to look at the period from the 8 weeks of when you got the loan, and they're going to add up, or you're going to have to add up your payroll costs, payment of interest on mortgages, payment of rent, payment of utilities. And they're going to look at all 4 things of those. And as long as that equals or is above the amount you got the loan for, you'll qualify for 100% forgiveness with, there's an asterisk on that. Because that sounds like a really great statement, except then the second part of that is they will then look at your average number of employees. during that 8-week period. So they're going to say, okay, what is your average number of employees during your 8-week period? The purpose of this is they're trying to see, did you save jobs? Did you bring back people so that they had jobs? And this is where I think it gets extremely confusing. The borrower can elect which method they want to use to calculate that average number. So they're going to have their 8 weeks and their average numbers. Let's just say you had 10 full-time equivalent employees during that 8 weeks. Then they're going to ask you as the borrower, which method do you want to use? Do you want to look at how many employees you had February 15th of 19 to June 30th of 19 and compare? Or do you want to look at January 1st of 20, how many employees you had till February 29th of 20 and compare that number? So they're leaving that up to the borrower. And again, you can use whatever's best for you. There's some businesses I know that typically in the beginning of the year, they're slower and it's just a business trend. So they might want to use that January to February because they have less employees on the books, typically. But you get to choose that. Now, the part that I find very ambiguous in the act is it also does say that they will also look at how many employees you had as of June 30th this year, which makes me believe that maybe you don't have to bring them back during the 8 weeks. Maybe you could, bring them back towards the end of June if that's what works for your business. But again, the SBA is going to have to give guidance because it is a little confusing. But when I'm calculating it, when I'm looking at it for clients, this is the way I'm looking at it per the act, and I'm not worrying so much about the June 30th number of 2020. And then it's not that your forgiveness will go away. Let's say you had 10 employees and now you're comparing against, and now you have 8. You'll get 80% of the loan forgiven. So they're calculating it based on that. It's not like you'll lose the whole thing. You'll get a percentage.
And again, this will all be done through the SBA certified bank. So ideally, it's the bank you're working with, or your banker has a relationship with someone at a bank that is certified. So we're not tasking this little government agency with managing this, whether it's the banking ecosystem that already exists.
Exactly. And then the other part that could affect your forgiveness that they're looking at, so it's kind of a two-part thing, is if you decreased your employees' wages by 25% or more during that period when you brought them back. So before you got the loan and after you got the loan. And there are some businesses out there that are asking people to take a pay cut so they can keep everybody. So they just want to make sure you haven't decreased those wages below 25% or 25% or below during that 8-week period. So I just give an example. If an employee made $100,000 before the loan and after the loan you had cut them down to $70,000, that would be more than a 25% decrease, and you're going to get some of your forgiveness taken away. So that's kind of all part of the forgiveness program, which I know leads to a lot of questions. There are a lot of things that still need to be clarified by the SBA with this whole thing, but that's the way the act reads currently.
All right.
And then, like Joe was saying, who provides these loans? At this moment, it's only banks that are currently an approved SBA lender, which you should definitely ask your bank about, or go onto the SBA.gov and look for the lender match. And I like we talked about earlier, I just like to really I know the Treasury Secretary is saying money will be out Friday. I'm also working with banks. I have banks as my clients. They're waiting for the SBA. They just can't even start the loan process, not even the application process, so the SBA gives them some guidance, because this program is unlike any that the SBA has ever done before. So the SBA needs to tell them what forms are required for them and what they're required to look at in order to do a loan. But the goal of this program is to get money on the street as fast as possible. So we're hoping that the SBA, really makes it easy for banks. And then ways you can prepare now. So even though banks don't know yet what you're going to need to provide them to get this loan, these are ways you can prepare yourself now. So no matter what, you have what's ready for the bank. And if they don't need all this, that's great. But if they do, this is typically what you would need to get an SBA loan. So it doesn't hurt to be prepared and get prepared now. So what does that mean? That means 3 years of the business tax returns, 3 years of all owners over 20%, and owner is anybody that owns over 20% of the company, 3 years of their tax returns. I say try to get your 2019 tax return done. Although I say that tongue in cheek because I know I don't have mine done, nor will I. But I know, advice I don't even take myself. But you do want to make sure that you have at least your 2019 year-end internal financials done, because at a minimum, you're going to need to have that most likely. Also, a good step to take is to fill out a personal financial statement. There is a form on the SBA's website you should use, because this is the SBA's form, and keep it updated. So, as of right now, it's not technically 331 yet. You could do it as of 229, and then just update it for 331. And you should really probably have every owner of your corporation or business that has 20% or more of the company, have them have this ready, because it could be important, and we don't know. The SBA might say, never mind, we don't need those, but it's something they typically ask for. The other form to fill out is the debt schedule. And again, there's a link here for the SBA's schedule on the website. And that's just a good thing to have filled out. Most likely, you'll probably need that no matter what for this program. So have that ready to go. You can fill it out as of 229 or 331, but have it ready to go. And then the last portion of this is make sure you have your payroll expenses for the last 12 months. Make sure you know what they are, that it's broken out. I suggest having your payroll registers. If you have a payroll provider, get the registers for this time period. Right here is saying March to February. It could be April to March. Just make sure you have everything ready. Also, make sure you have your independent contractor payments broken out. Make sure anybody that you 1099, you know how much you paid them during that period, so you can add that into your calculation. Your group health insurance, how much do you pay for that? That's another one. And then also make sure you're ready for, because keep in mind, this is a weird period. So as far as the dates go, if it's March to February or April 19 to March of 20, you can't use, W-4s. So make sure you know in that time period who made over $100,000, because the bank's going to need to know, so they don't calculate that into the over the 100,000 part into your formula. And then obviously make sure you know anybody that lives outside the US, you can identify that for the bank. Well, I work with banks and I work with businesses, so I'm on kind of both sides of the equation. What I can tell you is banks are going to process these faster for people who are prepared. They don't want to have to go through tons of paperwork to find your numbers. So make sure you're prepared. You can help yourself in this aspect.
Elijah, one of the things that I hear is the SBA site is crashing, lines are long, there's going to be a rush to the counter to get the money, blah, blah, blah. What is your advice? Your concept here is get your stuff together so when you go to the line and you get in front of the banker, you're ready to go.
Exactly. So yes, the SBA disaster site is constantly crashing. It took me 12 hours the other day. I mean, I wasn't doing it the entire time, but I had it up and refreshing to get through. So, obviously the volume's high. Although on the SBA disaster site, I found if you go in after 7 p.m. Eastern time or before 7 a.m. Eastern time, there's not as much volume. So you tend to be able to get in and get things done. I learned that after sitting there for 12 hours, but that's a good way to do it. And as far as the banks go, a lot of banks, and check with your bank, a lot of banks already have on their websites a link to apply. Now they don't know what you're going to need, but they're at least taking your name and putting them in the queue. So I really recommend checking with your bank. Go to their website; they might have something up. At this moment, banks that do not do SBA lending or not an approved SBA lender cannot do this fund. So just be careful if your bank says, "Oh, we're applying." I never want to take anybody away from their bank, but I also don't want you to get caught where you're not prepared because your bank told you they were trying to apply and they can't. So it is important to find an SBA lender. Definitely, that's priority number one. And I'm sure all of us can probably make recommendations of banks that do SBA if you need them.
And again, you said this will be weeks, maybe months until this money starts to flow.
Yeah, I hope the SBA gets rules out today, but just how complicated this whole thing is, I'd be surprised if the Treasury Secretary was correct in that area. So I think it's going to be at least a week before the SBA can tell banks what to do. And then from there, probably another week before the banks can lend, because they need to get their systems intact. But I'm telling business owners, prepare for 30 to 60 days before you can get the money from banks. I'd rather you be prepared for that than be disappointed or not have the cash flow you need. And as far as the EIDL money, you maybe will get that 10,000 in 3 days. That's what they're saying. I have not experienced that yet. But that is what they're saying. But the rest of the money, I would say 4 to 5 months, prepare for that. That way, at least no matter what, you're prepared either way. And if you have lines of credit, use them. That's the best thing to do. Another thing I'd just be careful about, there are a lot of credit card companies advertising they can get you money in 24 or 48 hours. Be very careful accepting that money. Most of the time it has about a 300% interest rate, and they take money out of your credit card receipts every day, and it's a nightmare. So just be careful, talk to your advisors before you take any money that isn't through a bank. So just to make sure you're not putting your business in jeopardy.
Well, you raise a good point, and it's one that we commented on earlier in another session, which around cybercrime. And just like you have people making up credit card stories, when you're vulnerable and exposed is when you're most susceptible to attack. So, maintain the discipline around your financial principles like dual authentication, wire transfer, stuff like that. But I know it's a tangent, but when you talk about some of the nefarious stuff that's going out there, and humans will take advantage of other humans given the opportunity, you got to stay with your bank is what I'm hearing you say.
Exactly.
So like Maury down the block, who's offering me some really good rates, I should maybe not do that.
Look into it. Make sure you're looking into. If it sounds too good to be true, it probably is.
It probably is.
Yeah.
Well, great, thank you. That was incredibly detailed, and I know there's even more details to come as this sorts out. But let's turn to Mark now. Mark, I know you've been deep into this. You were one of the first people to begin commenting on the impact of coronavirus and what that would mean to business. You're working with CEOs all the time on strategy, and this again, it's a black swan. None of us ever dealt with this before, so there's no rules to this game. What is it you're hearing? What is it you're learning? And more importantly, what recommendations would you give to our members out there?
Thanks, Joe. First of all, it's great to be here. I wish it were under more favorable circumstances, but I'd also say I'm so inspired by the spirit and the ingenuity of the American people. We're unified, and together we will mobilize to overcome this crisis. I'd also just like to mention this is a massive stimulus bill, where the stimulus provided by the US government in 2008 was roughly 5% of GNP. This stimulus will come out to be about 9% of GNP. So I'm hopeful it is the shot in the arm that so many of our members need. I'd like to clarify a few points about these programs that Elijah has already mentioned. And I might repeat a couple of things she said. So in the last round of stimulus that the government provided, they expanded the parameters of the disaster recovery program to include small businesses that might be impacted by the coronavirus. So as she said, these programs are administered by the SBA and provide you the opportunity to file an economic injury disaster loan, or an EIDL. And as an advance of the EIDL, you can submit for a disaster recovery grant. But the disaster recovery grants are only $10,000, and they are the SBC will, I'm sorry, the SBA will require that you do not have any access to financing elsewhere. That is not the case for the new 7A SBA loan under the Paycheck Protection Program, or PPP, where your other credit lines or financing will not be considered, and as long as you do not exceed the 250% monthly cap, your loan will be forgivable. And as Elijah mentioned, the banks that will be administering these programs, like Chase and Wells Fargo, will be creating online portals in a week or so where you'll be able to file your applications online. And the hope is that those types of loans would be able to fund more in like a month. I know that Chase is telling their customers they will not even accept an application if you are not already a customer at Chase before February 15th. And the bank's role in this process will only be to confirm that you are a legitimate business and that you had payroll as of March 1st. And what we're hearing from them is that their hope is that they will be able to underwrite and fund these loans without actual approval from the SBA. And your loan will be forgiven, as Elijah mentioned, as long as you maintain your payroll through the period ending June 30th at or above the level that it was the prior year. So companies will simply have to make a good faith certification that the loan is necessary as you've been impacted by COVID-19. And as you've said, I think almost all of us will be able to make that claim. In terms of eligibility, eligible companies are those with less than 500 employees, independent contractors, nonprofits with less than 500 employees. And there's also a special exception for Sector 72 companies. Those are the ones who, under the US government's NAICS Code 72, in the accommodations and food and beverage business. And if you're a restaurant operator and you have more than 500 employees in a location, you will also be subject to the PPP. So I think I also want to illuminate something that was already said, that you may use these proceeds to hire people that you have already laid off. So I want to just emphasize two really important points. There are 5 million employer companies in the US vying for this pot of money. So it's not only that we need to make sure that we have our ducks in a row in terms of our documentation, but I would implore you to file your application the very moment that your bank window opens. And then secondly, I'd hope that none of us would be making any drastic decisions right now around things like layoffs or furloughs until we have a clear picture of this relief and how it'll apply to you. So Ann will be distributing a document from the US Chamber of Commerce when we're done that includes a flow chart, has some great visuals in it that'll help you calculate the level of your subsidy. And I'd like to recommend that you all see that.
Great. So your suggestion, Mark, then is to get yourself together, get the documents that Elijah mentioned together, and get to the front of the line and get your submission into your local bank.
Yes, because one thing that isn't really being talked about is it's quite possible the US government could expend this initial tranche of money and would then have to appropriate more stimulus to meet any other further demand. So yeah, get in front of the line.
Well, yeah, well, this is predicated based on the fact that this is a 60 to 90-day phenomenon. And that as we've seen, and we're seeing early indications out of China that maybe that's the time frame when people can start getting back engaged. It's clear the program is designed for that, but there are some people that have said and suggest there would be a second wave. And what you're saying is that the government would line up and be prepared for that second wave if, in fact, this is more than just a Q2 thing.
Yeah, and back to Elijah's point earlier, I think the decision on which program might be best for you, I think a lot of it will depend on your level of distress. So we have some members who are highly distressed, and they're going to want to take out the SBA loans in addition to the PPP program. I would say if you're a company of moderate distress and you'd like to have some subsidy for your payroll, that's where the PPP program is really going to be appropriate for you, and you may not have to go through going through the SBA to get your loan approved.
Well, you make an interesting comment, because while many businesses are severely distressed, others are in fact surging and looking to hire because they're connected to the healthcare supply chain or some of the other ones that are deemed essential and are maybe not going to compete for these funds. But depending upon where you are is going to depend on the right solution. And your recommendation is to get with your banker and talk to them.
And your attorney.
And your attorney.
Because we're not attorneys here, but yes, to make sure which is appropriate. And if I could also just expand on your last comment there, Joe, there's going to be a lot of opportunity on the other side of this. There are whole new businesses that are emerging. There's a lot we can learn from the recovery in China kind of after the crisis has peaked. So for example, food deliveries are still up in China, even though everyone's back to work. The US government is relaxing a lot of compliance rules on things like telemedicine. And there are whole new businesses that are emerging. Zoom stock's up like 140% in the last 3 months. So clearly there are going to be permanent changes in our economy that some companies will be able to leverage for competitive advantage in the future.
Mark, you'd mentioned that Chase is not accepting customers who are not customers prior to February 15th, right? What if you happen to be working with a local community bank that isn't affiliated to SBA? How do you tap into these sources if your banker can't help you?
I think I'll kick that to Elijah. She's the SBA bank expert.
So two things. You can go to sba.gov to the lender match. You can call me or email me. I have a network of banks. I have a bank in New York City that said, send me any customers you need to. I will do all their loans, all the PPP loans you want. So there are some banks out there that are doing them no matter what, if they're not their customers or not. The bigger ones I can see because they have a huge network to hit.
So it's safe to say there's not going to be many layoffs in the lending industry over the next 30 or 60, 90 days, right?
Yeah, I think that's pretty safe.
Well, there's a lot of fear out there. A lot of people, heavily distressed people, they're reasonably and understandably so, they're really concerned. The financial picture is such a big part of it. What are the top 2 or 3 things you think people need to do to try to get themselves set up to take advantage of these programs, but also across a broader spectrum of how you survive this new normal until we begin to reboot our business and get on the road to recovery?
Yeah, so I say, number one, I'm telling business owners, take a breath. It feels like it's the end of the world, but it's not. We'll get through this. And there's a lot of, I have a lot of clients whose employees all of a sudden are coming up with great ideas. I don't know if it's because they're worried about their jobs, but all of a sudden there's like all this innovation going on. And that's great to see, and let's appreciate that. And then really understanding your cash flow, I think is key. I think that's key. I think Mark said it earlier. It is key to understanding what program works for you. Maybe all of them do. And knowing your banker, I think this is another key area where you should, or at least know someone that knows bankers. That would be a good thing to do. And then try to project out. I mean, if we're going to be in this economy for the next 60 or 90 days, you need to really understand your sales cycle. And will it be there in 60 or 90 days, or will it take another 60 or 90 days after that? Because that'll help with your cash flow as well.
Yeah, hopefully there's a mistaken belief that we'll just flip the switch and we'll go back to where we were on or about March 2nd. It's not going to be like that. It'll take time for humans to be comfortable being around humans again. But like I said, I can't imagine high school, college, or professional football fans staying home this fall if the teams are playing. Restaurants, I don't know about you, but I mean, my wife's a wonderful cook, but it's been a couple weeks and she's running out of recipes. So there will be some pent-up demand to go out and do stuff like that. But it'll be slow to come back. Mark, do you have any projections on? I mean, I know we're just making this up, but what's your sense of how this will play out?
We're going to have a massive GNP decline in 2Q. It's going to leak into Q3. I'll leave that up to the economists and the ITR folks. But I'm not worried so much about the depth of the recession. I'm worried about its length. So I think that a lot of companies will be able to recover if they could have some degree of normalcy in 60 days. And if that's really 90 or 120 days, or I think the other thing that's troubling is if the virus makes its way into the southern hemisphere, say Africa, for example, who has their winter opposite of ours, and then filters back into our economy in the fall, not only from a public health standpoint, but from an economic standpoint, this could drag on for 6 months, and then we have a very dire situation. One other thing, Joe, I just want to come back to. I know that this is a source of a lot of confusion, so if you will humor me, I'm going to read this verbatim, and it's from Senator Ben Cardin's office in regards to the duality of the two programs. Whether you already received an EIDL unrelated to COVID-19, or you receive a COVID-19 related to EIDL and or emergency grant between January 31st and June 30th, you may also apply for a PPP loan. If you ultimately receive a PPP loan or refinance an EIDL into a PP loan, any advance amount received under the Emergency Economic Injury Grant would be subtracted from the amount forgiven in the PPP. So that's what Elijah was saying.
Can you translate that into English, please?
You just can't double dip on the same things.
I'm sorry, can you translate that into English again?
Elijah, I'm gonna let you translate.
So let's pretend that you got 10,000 from the EIDL, right away, about 3 days before this program even came out. You got that 10,000. You were one of the first people. One of the things I didn't say in my presentation, because I think it gets a little confusing, is they'll do that paycheck calculation, the 2.5, and then you can add that 10,000 you got from the EIDL into your loan amount as well. And then you can pay off the EIDL loan. So I don't know if that helps explain things.
Well, I think it underscores the challenge that so many of our business owners are having. That is trying to sort through the nuances and the interconnectedness of all of these programs. We haven't even brought up HR 6201 and the impact on unemployment, but all these different programs, how do they fit together and what do they mean for me? Obviously, in times of distress, people are searching for answers quickly, but it's clear it's going to take time to sort this out, and we need to be strategic and thoughtful about the decisions we make. It's going to have a lot to do with the next wave of decisions, whether those are decisions about how do we now reboot and get on the road to recovery, or we got to stay hunkered down even longer, and what that means. Well, let me come to you guys then for closing thoughts before we close this up. Mark, I'll start with you, then come to you, Elijah. Mark, closing thoughts for folks. What would you share with them?
There's no reason not to apply for a PPP unless you haven't been impacted by the coronavirus. And if you wanted to do both, I would defer to Elijah on that. And just, closing comments. This is the United States of America. We'll come back from this. It's just a matter of when. So I just remind everyone, we're under stress. Our employees are under tremendous stress. So let's make sure we take care of them. Let's make sure that we're using this stimulus to share some good news and try to inspire some confidence in our teams.
Mark, thank you so much. Elijah, closing comments?
Yeah, I agree with everything Mark said. I agree. You should get the PPP money unless you're not impacted. Get that money. We're still, again, waiting for things to come down from the SBA, so there is some unknown. And I'm also telling people apply for the other program, EIDL. You can always turn down the money if you don't need it or you find it's not beneficial to you, but get prepared.
Great. Thank you. You want to go to that last chart then, Elijah?
Oh, sure.
So great. So we're so fortunate to have experts in our community. Elijah's a TA member, Mark's a speaker and been part of our community for a long time. We're going to continue to tap into the experts in our community and bring forward voices you can trust. One of the things that strikes me about this whole coronavirus thing is I'm not a doctor, I'm not an economist. It's who do you trust? Do you trust the data that's coming out of China or Italy or Spain? Do you trust what our politicians say or the CDC or others? Who do you really trust? And we hope that Vistage is one of those resources that you trust. We're working extremely hard to try to create the most consolidated and concise collection of assets. We've launched our Vistage Coronavirus Resource Center. This is where documents that we curate, content like this that we create. We want to be a place for you to go and get information that you can trust and respect. Mark mentioned the Coronavirus Emergency Loans document. This was put out by the U.S. Chamber of Commerce. It's one of the very best that I saw over the weekend, and so we're promoting it. It sits on the Coronavirus Research Center under policy. I invite you to go there and pull that down and take a look at it, because it makes it drives a lot of clarity to a lot of these questions that Elijah and Mark did an excellent job of helping us sort through. But more questions will come with time when we get down to the nuances. The key here is, as we know, cash is king. It always is king, but even more so now. Get with your local banker, specifically to your local lines of financing, and then look at these programs and understand and make great decisions. They're going to position your business to not just ride out where we are now, but to be positioned so when the economy does turn back and people do go back to work, you'll be able to capitalize that and get your business back on great footing. So again, thank you, Mark. Thank you, Elijah. And thank you to our members for listening to this. Stay tuned to the Vistage Coronavirus Resource Center. We will continue to bring amazing experts like we have here today to keep you informed and hopefully be your most trusted resource for information, insight, and data on the evolving coronavirus crisis. So thank you all very much, and we'll be back to you very shortly.